Morning, ladies and gentlemen. My name is Greg Michalowski, and today's date is September 23rd, 2014. This is a technical analysis look, quick look at the euro versus US dollar in trading here today. Now, I've looked at this colored chart that I've had here for a few days now. This chart represents where the market has been more bullish, where it has been more bearish, and where it's been more neutral. This neutral area is where we've seen the market bounce off, move below, stay below, come a little bit up above right here, and that this day right here in last week's trading held against what the 100 and 200 hour moving average. We'll talk about that in a little bit right now, but the holding against this 100 and 200 hour moving average sent the price last week on Thursday and again on Friday and again yesterday to new low levels. Now, at the low yesterday, we fell below this bottom side trend line, and you can see no momentum to the downside. We had one bar close below, the next bar closed back above, and then we started to use that old line as support right here, and we started to rotate to the upside. Today's move to the upside, I think it's more of a short covering rally, a disappointment in the inability to move to the downside. We had data come out of the Eurozone, which was okay. German PMI was better. The EU PMI was not so great, but the market still took its cue from the technicals, it seems, and moved to the upside. We got back above the September 9th high here at the 58 level, and then moved above the 200 or the 100-hour moving average. That's the blue line in this chart, and we've been able to keep our closes on an hourly basis above that 200-hour moving average. We just came down and tested that level here and bounced off of that level. So the buyers seem to be lining up against that level in trading today. Up above is the 200-hour moving average. That's the green line in the chart, and going back to this day last week when the market found resistance against the 200 and the 100-hour moving average, that will be a key level that the market will need to stay below if the bears are going to remain in control. Right now, we're in between what I call the goalpost defined by the 100-hour moving average and the 200-hour moving average, and when it's between the goalposts, it's more of a neutral. It's somewhat bullish above the 100, but it's somewhat bearish again below the 200. It's when the market breaks above or below both of these levels that you get a more definitive bias from a technical perspective. So we'll be looking for either a move to the upside or a move to the downside later in trading here today. What is the market going to decide? Right now, we're holding against the 50% retracement, holding against the 200, but we're also holding against the 100. If you have no position, look for a break with momentum. If you're long, you probably don't want to see the price move back below that 100-hour moving average. If you're short, you don't want to see the price move above the 200-hour moving average. It's as simple as that on an intraday basis. Taking a look at the weekly chart really quickly, if we do head to the downside, be aware of this 127.86 level. We have a trend line across the top, parallel trend line across the bottom. We've been holding the bottom trend line over the last few weeks for the most part, and this week that trend line comes very close to that 86 level, which is our 61.8% retracement of the move up from the July low to July 2012 low to the high that we saw in 2014. So there you have it, a quick-ish type look at the euro versus US dollar. If you like this video, make sure you subscribe to our YouTube channel by clicking this button right here, and also visit us daily at forexlive.com. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.